Well, for more on finance news, we're now joined in the studio by Suzanne Haddan, Managing Director of BFG Financial Services. Welcome to the studio.
Welcome back, Suzanne.
Yeah, thank you. It's great.
Yeah. Now, Suzanne, it is that time of the year. It is end of financial year. We're all scrambling to get our receipts out of shoe boxes.
Yes. Not Johanna. She's on top of hers.
She's on top of it, yeah. I read somewhere that 1 in 4 Australians don't complete a tax return each year. Now, the last year was a bit chaotic because of the pandemic or so. What's the best tip that you can give someone trying to get everything together for to file their taxes?
Okay, so the first thing is to understand what you need to declare. So the tax office, remember, is very good at data matching, so don't play chicken with them because they will catch you out. So the areas they're concerned about, not your salaries, but it would be cryptocurrency profits, for example. They're a very weak area for disclosure, and the data matching has been extended, and they'll be writing to about 100,000 people to say what's going on with your profits. They tend to hear from investors in cryptocurrency when there's losses, not so much when there's profits. The other area, the tip is when you're receiving rental income, whether it be Airbnb, stays, that sort of thing. They're data matching through real estate agents, through the platforms, so they are aware of what you are earning, and now they're going to focus on your deductions. So make sure you're claiming and can prove your deductions.
So there's no escape.
There's no escape, and certainly with working from home, they are expecting that more people will be claiming that deduction, and they extended the simple method, which is 80 cents per hour, and all you need is your pay slip to show your hours at home, which is a good, less risk method to claim, I think.
Yeah. As Fauziah said, it's been such a chaotic year. It's been certainly a different financial year. As you said, the working from home element,
yes,
but also JobKeeper and JobSeeker and people withdrawing from their super. How is that impacting?
So JobKeeper and JobSeeker are assessable for tax, so you must put those on your tax return. But the withdrawal from super under the COVID early release scheme is not taxable, so you do not need to put that one on your tax return, which will be a great relief to those people, certainly.
Just moving on to the working from home. Now, you mentioned it was the 80 cents per hour shortcut. What is that? Explain that to us.
So what it is there's 3 methods you can use, and it depends how good you are with record keeping. So you can claim the actual cost of working from home. You can claim another cents, 52 cents per hour, then claim other expenses around, but you've got to have the records and keep those records to prove that claim. Whereas the shortcut method was just for COVID period, and it says you don't have to keep any records. You don't have to have a designated area, an office at home. You can be sitting, the 3 of us, around a desk at home, and we can all claim 80 cents each. So it's a simple method to get people over that expense that they're incurring. Their air conditioner's on more at home. Their electricity's on more at home. So they are incurring expenses.
Now, we've spoken to you before about making extra super contributions to help with tax time. What are your recommendations this year?
So the first thing is many people, if they're fortunate enough, might be aiming to get up to that $25,000 limit of contributions to super through salary sacrifice, through their compulsory 9.5%. The tip I want there is it doesn't matter what your payslip says. It doesn't matter that your employer has advised you they've deducted that money. It's did it make it into the super account before 30 June? Because you might not realise that employers get up to 3 months to deposit your money into your super. So my tip there is check with your super fund. If you're short, you can make a personal contribution and claim it on your tax return. The other tip is you might want to have a little chat to your employer about making your contributions a bit more regularly. The other one I like for low income earners is putting $1,000 of your own money into superannuation. It's called co-contribution. And if you're under roughly $40,000 of income, the government will put $500 into it. That's a 50% return. Think about a young person. They could start doing that $1,000, $20 a week. they can actually take that out in future years for their first home purchase.
Yeah, that's
There's an
amazing.
incentive when you're
Really-
talking to the young people in your household.
Absolutely. Just before we let you go, I want to talk about small business, and I saw that there was a recent survey that showed that small business weren't aware that instant asset write-off has increased to $150,000. So
Yes.
what does this cover?
That's a really important one. Maybe your small business needs some new computers. And they're quite expensive, and you can write them off straight away. You might want to redo your whole technology system and re-get your server and a lot of things, and you can claim it straight away in your tax return this year, and you can also, instead of having to depreciate it over the useful life of the asset. So it brings forward the tax deduction, which helps with cash flow, which is a great one.
Fantastic.
Suzanne, it's always great to have you in and to prompt us to get our things organised. It's very helpful. Great to see you again.
Thank you. Good to see you.